Hey, everybody. Welcome to This Week in Pre-IPO Stocks, the only place to come to for secondary market pre-IPO stock discussion. With me, the world famous Nick Fusco, CEO of PM Insights, a pre-IPO secondary market pricing company, the best pricing in the world. And then Evan Cohen, founder and chief operating officer of WithVincent.com, a media company focused on alternative investments. It's the only place outside of this podcast and PM Insights where I go for alternative news. Okay, I'm Aaron Dillon. We do venture capital funds for RAs at AG Dillon & Co. Gentlemen, three banger of topics, I think, today. The first one I wanted to talk about with you is Meta did effectively, I think, a lift out of the best talent of Scale AI over the last 2 weeks. So just some quick stuff here. So they did $14.3 billion, it looks like being the final number, for 49% of Scale AI stock. Most of that money, or some of that money, went to investors. So it was like a special dividend, right? So if you were a Scale AI investor, you got cash, like a dividend payment, but you still own your stock. It was a dividend, right? Very interesting. The CEO, Alexander Wang, and quote unquote, several employees, right, which I'm assuming are probably some of their best developers, are going over to Meta and are going to work there full time. Okay. And then they announced that they got a new CEO at Scale. So super interesting. In theory, I guess, Scale is still a separate business. It's got its own cap table. Meta's obviously 49% owner, but a lot of Meta's competitors are customers of Scale. So this is like a really interesting deal structure, I think. Right. But like, Nick, what do you think of this, man? Like, what do you think of this type of transaction? What do you think the prospects for Scale AI is going to be in the future? Like, where's your head at on this one?
Yeah, I think for the masses, Scale AI is still going to be a product available for cleaning, labeling data for use in any of these AI models around the globe. But if you took the best portion of the people from that company and you re-implanted them into a new role sitting with Meta, you're going to get the best possible breed of players to build that inside of Meta. So maybe Meta gets a key advantage of where Scale would go from here.
Right.
And then the current trajectory is what becomes available to any other subscriber of Scale. So it could just be really interesting. And the payment is effectively intended to make them whole and also have some control over what's occurring at Scale without tilting the scales to 51% and owning the company outright. But I think it's really clever. I mean, a lot of AI would not run as well if you didn't have a company like Scale behind the scenes to actually appropriately clean and label what they're digging into. And even things like the unconscious bias of going through old police records and understanding why we shouldn't be busting people of a certain race or age or anything like that. All of that is so important to get right while we're so quickly growing this end of the market. So really cool deal, I would say that was getting done. It's almost like giving Meta potentially an unfair advantage. Like some hedge funds buy a data set and embargo it for use from others in the future until a certain time when it's just should be commonly available, or like a patent on a drug. We get it first. So yeah, I would say that was just a job well done, probably from Meta, but time will tell.
Yeah. Okay. So I do 100% agree. This is a great deal for Meta, but I guess like Evan, let me ask you this. The last round that Scale did was at 14-15 billion. Okay. So basically it looks like Meta, I think, bought the company and then gave the existing shareholders kind of like a free option on the upside, right? If there's any kind of business left. Is that your take? Like if you're a Scale AI shareholder now, right? This company still exists. I heard Google's out, so they're not going to use Scale AI anymore. So they're potentially going to lose some customers from this. Is this as interesting of a business or an investment opportunity as it was before this Meta transaction, kind of afterwards? obviously, like Scale's kind of the leader in the space, but maybe not with the CEO or some of the key employees out of there. What's your thoughts there?
I mean, I think you just hit the nail on the head, which is that um, by taking the talent, especially their CEO, who is really like he's really essential to that business, and he has been the face of that thing for a long time. By taking those people out, it definitely makes the company less attractive, just on a pure investment strategy. Second, by partnering or having this like massive stakeholder in Meta, you are, sort of to our last conversation or a couple episodes ago, we're starting to create lines here of like, okay, allegiances. It's starting to look like, the old Europe days where, okay, well, like Scale is going to be with Meta and Microsoft's going to be with OpenAI. And like, we're having these allegiances and it's like really a talent war. And I do think that also creates an uphill battle or, a headwind for Scale's business.
Right.
And so in a lot of ways, like the deal is exactly sort of what you said, Aaron. It's hey, investors, we're going to buy you out at this price, but we're going to give you the option, and there's still upside here, but it's a more murky path. The business still is growing. The TAM is still massive. It's going to get competitive. And so I think it's a all around good deal for everybody, all the stakeholders in general. And it's certainly a great deal for Meta.
Right. Yeah. I mean, look, I just wish that our government would allow M&A to happen. Right. Because I think if Meta wasn't worried about like a full acquisition getting canceled by our government, this would have just been an acquisition.
To some extent, yeah. But, when you think about what happened with OpenAI and Microsoft a few years ago, instead of wholly acquiring them by allowing them to be spun out, that created so much more enterprise value for both Microsoft and for OpenAI stakeholders. So I actually think that like the acquisition in some ways kind of hinders the upside.
That's fair.
So maybe this is like the strategic play, which is like, hey, why would we wholly acquire you? We can actually we can do the NVIDIA game, which is like we invest in you and then you buy our assets and you round trip the dollars.
Yeah.
And we become a customer and it increases the value for everybody. It's actually a better system in a lot of ways for investors and stakeholders, especially at the early stage.
I mean, I think it's pretty baller that you can be Alexander Wang, who's the Scale CEO, and someone's willing to write a $15 billion check to get you to come and join the company. That's so cool.
It is. It's definitely interesting. But I mean, at the end, he's still like now he reports to Zuck, and I think that's quite interesting.
I know, but he's going to be well able to walk around for the rest of his life and be like, "I'm a $15 billion man." Like that's pretty cool.
He could have been
That's
$100
good
billion
cocktail
man.
party, good cocktail party fodder, in my opinion. But listen, I don't know. Like I don't know about. I have a lot of people calling me and asking me about this company, and it's interesting because in one sense, I don't know if Scale AI being wholly owned by Meta would allow them, like, would competitors do business with them, right?
Yeah.
I don't know, right? That's kind of it's an interesting one to think about. Odds are, like to your point, Evan, it's probably better for it to be independent, to be able to maximize on the customer opportunity. But then, like Meta owns 49% of it. So it's not a controlling interest, but arguably they're probably going to be able to see some information or data, even if it's black boxed, right, on what's going on there. So I don't know. I mean, it's just, I don't know. This is an interesting deal. It just feels a little Frankensteinish to me. Like you pay that much money just to get someone to come and join your company. You should just acquire the whole thing,
Can I ask you guys, okay, if you were investors in the seed round of Scale AI, would you be happy or sad?
Probably, I would probably not be very happy because I think probably Scale could double from here, so that would, if you kind of were able to hold on and go from there, that would be good. I mean, obviously getting some DPI in a world where there's not a lot of DPI these days is probably cool.
But doesn't if Scale doubles from here, they still get that?
Yes.
I don't think that's what I'm saying. I don't think it's gonna. I don't.
Oh, yeah. So Aaron, I'm going to take the other side that I would be happy. First, just the fact that we made it this far, but secondly, I think that they will retain most of their customers. They will absolutely lose the direct competitors of Meta, so which would be Amazon, Microsoft, Google, right? Because now they're going to try to find another Scale 2.0. But anybody else that's training models and could have something that's not powered up by Meta, but it's just they're an investor, I think that's totally fine. I would
Yeah.
say the share price should take a hit because the founder's gone, but then that hit, I think that's why they were trying to make up for it with that payment out. So I think I'm still okay, and I now have a risk adjusted, not a risk adjusted, but I've been compensated for the loss of my opportunity, right? So
Yeah.
there's some
I
opportunity cost
guess.
at play that I'm factored in. So
Yeah.
yeah, but Evan, I feel like you're the opposite end. You're like, no, I want to hit this out of the park. That should be $100 million company or $1 billion company like any day of the week. Um,
I mean, it's still
yeah,
like, I mean, it's still a massive home run. So,
yeah.
I mean, I'd be happy.
Yeah. It just, I don't know. It just doesn't feel, sometimes when things are overly complicated, in my experience, it's like unnecessarily overly complicated due to regulation. You know what I mean? Like if the regulation, if Meta could have just bought whoever they want to buy, would they have done this deal this way? I don't think they would have. They would have just bought the company, right? So I don't know. Like now you have these like, I don't call it conflicts of interest, but it's just not clean. And then
But everything creates something new too. So I know we want to hop into Ramp and a couple of other companies, but now you're going to have competitors to scale AI getting all this extra business from potentially the other big three, and now their businesses have completely changed. It's really cool. You
yeah,
nothing happens in a vacuum here.
yeah,
So
yeah. I don't know. It just I don't know. This is just such an interesting deal. That's why I wanted to talk about with you guys, right? Because I don't think you see things like this all the time, and it's like to me it just feels a little Frankensteinish. If it was just a straight up acquisition, there's no way the price would have been 14.3 billion. I guarantee that. It would have probably been closer to 25 or maybe higher. To buy a company that's growing this fast, full out,
right,
100%.
yeah. Look what happened to Wiz.
Like, exactly.
Yeah,
That's my point. So like, now you're getting, so like maybe okay, I'm in at 15 and then, but I don't know what the upside is. You just gutted the place out of all the talent. So like, I don't, hopefully they can reload, that's all. Of course, in all things that I do, fellas, I hope scale crushes it from here and goes 10x, right? And everybody makes a ton of money. That's where I'm at. I just, I don't know. Like as an investment prospects, I have people asking me. I don't know. I'm on the fence. Like part of me is like, let's see what happens. Like let's wait like a couple 6 to 9 months and see like what happens with the revenue. Do a lot of customers leave? Like let's just be patient before you kind of take a position, right?
I'm super long bullish scale.
Oof.
I still think I think it's going to at least double and triple.
Evan, those are the high conviction bets. That's the high conviction that investors love to hear. You know what I mean? I love that. Okay. All right, cool. Let's talk about Ramp. So Ramp just raised its $16 billion. They're like a corporate card and expense management solution for businesses, right? So Founders Fund led the deal, right? They did a $150 million secondary sale at $13 billion in March. So we're in June now. So that's just 3 months. And that's a nice little pop, right? 700 million ARR as of January of 2025 was the latest revenue number I could find. So that's like ballpark called 20x revenue multiple, which I think is in line with what we usually expect to see. Maybe not in fintech, but definitely in AI. So what are your thoughts on this? Maybe Evan, we'll start with you, man. Like, what do you think of Ramp as a business? Chan just went public. It did well, right? So fintech's maybe hot again. Like, I don't know. What do you think?
I mean, this is B2B, not B2C. So I mean, they're absolutely crushing it. It's one of those Founders Fund, amazing businesses.
Yeah.
They're here in New York, so we see a lot of them and we hear about a lot of them. Yeah, I mean, I guess my thinking is none of it's surprising. It's a little bit of a bummer if you were like an employee and you sold 3 months ago and now you just missed out on a little bit more upside. But these are good problems to have.
Yeah,
I think what's interesting, and I read this on Twitter, is that like I think this valuation bump and a lot of the momentum is driven off of the fact that Founders Fund companies seem to have somewhat of a direct link to these government contracts. Like I think there was a rumor going around that like half of like the government expensing software was going to be moved over at some point to some of these new tools, and obviously Ramp is an opportunity for that. So it's a big business for them.
Yeah.
So yeah, and you see with like Anduril, SpaceX, now Ramp. So yeah, I think it's interesting. I mean, it's still a very large TAM. I still think it's very competitive, but they're firing on all cylinders, and
Right.
good for them.
Right. Nick, what do you think? What do you think
Yep.
of Ramp?
Yeah, as long as the growth continues. I mean, we had it priced on PM Insights at 14 billion a week ago. So there's, it was predictive, which is nice, and then a nice pop on the back of that. And I actually just like what the company is out there doing and supporting. It's supporting cash management for people to be more aware of how cash is being spent within the company. And also in my mantra, within a business, I like that there are other small businesses that can help track themselves in terms of what their spend are versus what they're bringing in. So I just think it's a great company all around.
Right.
So yeah, this is one where I'll just revert back to just rooting for them. I know you root for everybody, Aaron, but I do actually fundamentally approve
Yes, I do.
of this company. And the only qualm I have with them is I listen to the Founders podcast, no relation to Founders Fund, and they take up about 2 minutes of every freaking episode with advertising for Ramp.
Oh,
And
really? Yeah.
So that's a bit annoying, but that's the only qualm I have, and that's a pretty light one. So they're definitely positioning themselves for marketing in a good way too. So yeah, I like it. I'm behind it.
Yeah. This company to me is the 20x revenue multiple is 22x, right? If you take, but again, that's a January revenue number, right? ARR too, for what it's worth, right? On that $16 billion valuation, that does seem a little rich, but revenue has been growing a lot. So maybe it's, if you take today's revenue, it's not 20x, it's something like 15. It's interesting though. That's a higher multiple than I would have thought.
It's just something that's so hard to unplug, right? They're going to build on the prior year's ARR in most cases. I don't know how much attrition you're going to get in a business like that once you plug it in.
That's well said, because I did try to use Ramp myself for my business, and it was not like, I'll call it a business bank account or like signing up for an Amex credit card. Like there was some proper setup. So you're not wrong about that, Nick.
Yeah, I wouldn't compare them to like a credit card company,
right?
I wouldn't compare them to Discover or something.
Well, I mean, but just to be, I mean, their revenue does cycle because they make a majority of their revenue off of interchange. We saw that in 22 and 23, like those businesses, especially when you're serving customers of a high risk market. They serve startups. When startups cut back spending, that all trails down. They've been actually one of the best companies, I think, of demonstrating the data moat that they have. Like they have some of the most interesting insights because they see all the spend from so many different companies in so many different sectors.
Right.
So they are cyclical, and I do think that like this valuation is, again, it's a tailwind of what we're seeing in the broader market. So that's why the numbers look good. Like all fintech, it will be somewhat cyclical. What's I think very interesting is they're super innovative on the finance stack. I mean, they're one of the first companies pushing into stable coins. They made a big stable coin announcement, I think, like a week or two ago. They're trying to go international. They're trying to do FX. Like there's a lot of different other TAMs that they're going after, and they're really focused on innovating on the tech stack of payments, which me, I'm a big believer in that. So I think it's quite interesting. And if you're betting on them because they're selling into a really good market that is quite sticky, really likes their product, and they're taking an old business and just making it super modern and tech friendly. It's great.
Is it fair to say that Amex would be a good comp to these guys? Is that fair? I mean, at the end of the day, it's corporate card.
I would disagree. I would say that their probably biggest competitors are, well, obviously on the card side potentially, but I would say like the bigger direct competitors are like Capital One, or the business banking products, big platforms like that do expense, like Concur, that sort of stuff, which is owned by Amex, right? Or has a big?
I don't know. I don't know who owns Concur.
It's like Concur, Capital One, JP Morgan banking, those sorts of. SVB was a competitor, I would say now that's where they're going after, because the card stuff is super, that mode's zero. Everyone can create a card.
Yeah.
But it's really expensive high management.
So if I just pulled it up on PMI, and you've got Capital One trading at a 2.5. Chime was at a 5. Revolut 11.
That's
ramp
on
at
revenue. That's on revenue, right?
yeah, on revenue, and then ramp at 13. So a little bit different than Aaron's numbers.
Yeah.
But I do think, yes, you have the cyclical nature, but then all the other features that are embedded into this, different parts of that business will take different multiples themselves. So if
Yeah.
you only focused on the interchange and everything else they're doing, they're going to be somewhere between a Chime and a Revolut and a Capital One
Yeah.
or something. But if you focus on where they're growing the ARR growth, that will demand the higher multiple for that end of the business.
Yeah.
So yeah, it's a weird one. Not
It-
there's no one that looks exactly like them.
Does Capital One's market cap include Discover? Because they bought the rails. That's why.
I am just using whatever public information.
But Capital One's
I
like a
had,
proper
yeah.
bank, though, right? So they got net interest margin. I mean, I guess all American Express is a proper bank too. For that,
Yeah, no,
for that
it's really just it's card issuance, like interest on banks, business banking, business payments. Those are what Amex.
That's kind of where my head's going with this, though, right, Evan? It's like, all right, you get in at 16 billion. What takes this company to like 32, 50, 75? Amex has a $206 billion market cap, right? And, Amex does like credit cards. I mean, corporate credit cards is their 800-pound gorilla. They obviously do direct to consumer cards too, right? And then, they got like a online like savings account. You know what I'm saying? I think they do some personal loan stuff, but for the most part, it's credit card business. So that's a $206 billion kind of corporate credit card business is the way I look at it, man. Capital One does lending like properly, but there's room to grow there. I guess that's my point. Like if I'm had a sales at Ramp, I'm like, I'm going to eat Amex's lunch because we got better technology to support the card payments, right? So, and we can 5x from here,
As I said, I think the card issuance is a very competitive and like almost like commoditized business. I think the differentiator for Ramp is where they integrate the stack or the technology of an Amex with the QuickBooks accounting and reconciliation, with the Expensify expense and reconciliation, with the cash management. They have a treasury product, so you can earn interest on your cash or on your available cash wallets. They have invoicing and payments. Like those things are, those are the innovations on top of just the issuance. The issuance is just the moat, right? Like, okay, how do we get you? How it makes it easy to spend, but the receipt capture, the issuing to clients, the digital cards, all those things, which is why I think more like Capital One, any card issuers just doing a lot of card issuance to small businesses, medium businesses. Amex is obviously on that, but neither bank, Amex or Capital One do any like reconciliation.
Right.
They don't do
right.
Yeah, they allow you to hook into a QuickBooks or something like that, but not in the same degree as what a Ramp will.
Yeah.
And they can going back, we just talked about Scale AI. So they all help you tag things, but half the time they tag like a restaurant as the wrong thing, So no one actually does a particularly good job of always nailing what you've actually spent your money on every year.
There's got to be an AI for that. Somebody should be working on an AI solution for that. Maybe Plaid or somebody. But listen, I like this company. I get it. I think to me as a private markets investor, I'd be just curious on, when they would hit the button to go public, right? So if you're a $16 billion fintech company, do you go, are you still public? Are you still private at 32? Are you still private at 50? Right? Like they're probably, I would think, especially with some of the fintech companies and the crypto things that are coming down the pipe, it might be kind of a good time to go public, sooner rather than later. So might be an interesting company. My point is, might be an interesting company. Just wait till it's public because it might be public in the near future, right?
If they're going to get the same treatment as everybody else for the last 5 months, that's great. Yeah, go for it.
Time to go, right? It's time to go. Yeah. Okay, cool. All right, let's talk. I got to tell you, fellas, I'm looking at Glean. Okay, Glean. I'm not sure if you know this company, but it's an AI, what I would call an AI app, right? So I know that we've talked about AI apps in the past, but Glean effectively does enterprise search, right? So in short, you can, if you're a company, you can connect your like Google Workspace, your Microsoft 365, Slack, Salesforce, etc. So all your SaaS kind of solutions that you use for your business, you can connect those to Glean. You can then search off of it. They do like enterprise search. And then of course they've thrown like a ChatGPT on top of that, right? So now you can like use ChatGPT and it accesses all your data files and emails and all of it, right? Internal communication, messaging communications. And then they've also now are doing AI agents. So they're helping their clients build AI agents on top of all of their kind of internal proprietary data. So they don't have their own AI models. They use everybody else's AI models. What's interesting that I've learned over the weekend, and I heard this oddly from like multiple different things that I was listening to and reading, but if you use OpenAI, Anthropic, etc., for your business, they own that data after you upload it, kind of upload it, and you run a query, etc. Like that's their now data at the shop. If you use these open source models, you own the respective model, right? Versus kind of the company owning the respective model, which is super interesting, I think, especially as companies go forward. I think they're going to opt for more of the open source models, not because the open source models are better, have a better results, because they're actually going to own it, right? Versus an OpenAI or Anthropic. So that's interesting too. But they just did a raise at 7.2 billion. Wellington led the deal. They were at 4.6 billion in 2024. So it's a pretty healthy increase, right? In just 1 year's time. They have 100 million in annual recurring revenue. So what are your thoughts, Nick? I'll start with you, man. Like, what are your thoughts on connecting all of your email, data files, etc., into a solution like Glean? Like, how do you feel about that? Do you think it would add value to your business if you had kind of connectivity or an AI large language model like sitting on top of your full business to answer questions and be an assistant for employees?
Totally. And I think this is where all of us have a little differentiated thought on would it be beneficial or is the juice worth the squeeze? And for Glean, I think you could, from my understanding, and I've not yet used it, have a little bit more control over the data use and privacy than you would elsewhere. Or it's almost like when you land on a website and you click the toggle to accept all cookies. I'm that guy that actually says, oh, let me select which cookies I want to take.
Right.
That seems more my speed. So I would very much like to have some sort of input to a layer such as Glean that could then become a work assistant that could actually completely bifurcate work and play. So I don't want my family play bot knowing much about my work, and I don't want my work knowing much about my family. Separation of church and state. And then I selectively want to make sure that I'm not feeding any work information into anywhere else that we don't want it to go. So I had a call on Friday with someone that was very concerned about seeing PM Insights data through Perplexity. They're like, why is this out there? I'm like, oh, certain information we give out to these LLMs, so they service it up, but it serves as marketing content for us. But I don't want my paid for content ever being exposed, right? So I try to walk a pretty fine line in my how I would do my business and how I would do my business, right, through a platform like Glean. But I think it does come across as the appropriate styled or potentially in a very appropriate solution for the new world that we're going into.
Right. Evan, what do you think about AI apps? Do you have any concerns with data security, like Nick mentioned? Like, where's your head at with this?
Tons. I mean, data security is paramount for any of these businesses. So I think there's a lot to consider there. I understand what Glean is trying to do. And in fact, I have a little information from I have a buddy of mine who works in the solar industry, and his firm has like Microsoft Copilot, and then they just activated Glean for their team. And he's like, it's like a superpower. So he really loves the product.
Copilot's probably the biggest competitor to Glean, right?
I would imagine so, yeah. But I mean, and so so that's like the only person I know who has ever really used Glean, and he seems to really like it. And so I do like that. I mean, and I think that there's a lot of value if you're a large corporate enterprise, sort of old school business, like, financial services, and you're like, look, I have my like SOC 2 and my data moats, and I need to protect PII, and I have to follow all these random regulations and compliance tasks. So there's some value there. At the same time, I wonder, looking at this, like it's a Series F. That's like pretty late. This means this company's raised a lot of money, and sure, they're at a high valuation. This is a nice double for them, but like I do wonder, if this is maybe, and this is going to sound totally crazy, if this is like the old guard of AI.
Yeah.
Like, is this like one of the, like, are they building in? They were effectively like or like the very early stages of like the generative AI movement. They were one of the first companies, and now they've raised all of this capital. And I wonder if like it's just a little too old school for where the puck is actually going, which is like you see these like new models, these new products where they're just like, we have better data moats, better data models, thinking a little bit differently, and we serve a new school type of business. And I wonder, like, for my friend who works at this old financial services company that's solar, like, I wonder like how much of his business is old school, right? And like, is that not, should that be disrupted, like the way that they already operate? Like, this is like an AI trying to take an old school business and make it slightly more modern, and then like at the end of the day, like, you just rip the whole thing out and fix it.
Yeah.
So I don't know, I think there's a market there. It might be a transitional market relative to where the puck is going and the way businesses will operate 10 years from now. But they certainly have at least one happy customer. I'm not really familiar with their firm that ran it, or that led it, Wellington, but I mean, it's still a large valuation and it's a lot of money.
Yeah, this business is a little. I'm like very interested in this business. There's something about. But first of all, like Databricks, I think does something similar where they help like corporates or enterprises like get their arms around the proprietary data and structure that so that it can be trained off of LLMs. The thing is, Databricks, I get the sense that that's not like, it's not the easy button. Glean is like the easy button. It's like for guys like me, right? I'm not gonna probably use a Databricks, but I could connect in my Google Workspace and a couple other tools that I use. And if I can get some immediate value out of that, it's 95% good. That's awesome. Like, right. I'm off to the races.
And you're using most of that for your own internal decisions and next steps that you're going to make. So in effect, you're okay with clicking the accept all button, right?
Correct.
And that makes,
and also too, I mean, to the extent that I could then have like an LLM sitting on top of all of my stuff and it's secure, to your guys' points, I find that interesting. I don't have to put a lot of time in setting it up. I don't have to spend a lot of money setting it up. It's like a reasonable fee. I can like digest it. That'll make, like, for small and medium-sized businesses, that makes a ton of sense to me. And then to the extent that they make it easy for me to set up these agents and automate some workflows, dude, I mean, that would be huge. So, I mean, you guys know where I stand on this. I'm like ready to give all of my stuff to some AI. Like, I'm ready to just like load it all up. I want the thing like proactively telling me what to do all day long. Like,
so I think some of this is really, really wild. That this is okay. Evan, you talked about let's skate to where the puck is going, and maybe this Glean isn't enough. And I'm maybe of the camp, you know what? For a lot of businesses, this is perfect because it's not going to over-engineer anything. And maybe, Aaron, that's a nice answer for you. And then 3 years ago, the answer was UiPath. Right. And UiPath is just getting smoked, right? Because they didn't skate to where the puck was going at all. Then you have folks like Glean that are kind of doing, I've got the solution for the moment. And then you have folks like, who knows who, it'll be the Anthropics and OpenAIs of the world, or the next one to replace them, going to where we're going next. But yeah, I think everyone could have little bit of a different flavor here. So it's cool as long as they don't have that same UiPath reckoning that you would see from like an RPA, robotic processing approach. So
this is the company. Like, I've been talking with a lot of people about AI agents, because I'm like, that AI agents kind of, to me, fall in the AI app category. And the one thing that's becoming very obvious to me is that companies cannot build their own AI agents. It's literally like they need a third party to come in and help them do that, right? Like, the technologists that are at a company do not have the expertise, the AI expertise, to be able to build these agents. That's what I'm seeing out in the marketplace. So to me, there's this opportunity for AI apps to kind of come in and fill that void. I don't know what that looks like, but like Glean, I find Glean to be an interesting solution because it looks like it's like the easy button for some people to start to do those things, right? So this is where I think we're going. I think like Salesforce is a good example. I'll give you this. Salesforce is a good example. You could buy Salesforce, okay, CRM tool, and just use it. So any of us could buy CRM, use it. Or you can hire these like third-party consultants that come in and they'll interview you and they'll understand your workflows and they'll build customizations, and you can connect this thing or connect that thing, and it like makes it better. You can integrate this piece of data, that piece of data. Okay. I think AI agent businesses are going to start to look a little bit like that, like Salesforce, like, which is no surprise to me that Salesforce is doing AI agents because it's like a natural next step for them. Right.
Yeah, I wonder if that though is still like an old school approach compared to the way that it should be built. And I'll give you like a specific example.
Okay.
Today, you run a business. Let's say you're a salesperson and you have Salesforce or some CRM tool. You call a person, you update a spreadsheet, you get on a call, you get an email, you read the email, you go into Microsoft Word, you draft a contract, you send the contract via Ironclad or DocuSign or whatever. Like each one of those databases and tool sets, you're opening an app, you're logging in, there's a seat on some sort of SaaS bill that someone's paying. And you're like, okay, cool. So how can I make my life a lot easier? Well, I could get an AI agent to go to, find the email, update the CRM, go into DocuSign, click the link, blah, blah. I'm like, okay, cool. So you've taken sort of the UI path approach with a little bit more spice to it. And I'm sitting there saying, why do you need those tools in general? Well, just have the AI agent do the whole thing, and you don't need to have the CRM and DocuSign and all that stuff. You're just like, well, let's just like rip it all out. You find like vendors that just do the core functionality, and like you just have one data set. And so that's why I think like where the puck is really going, where it's like it's really everything is cohesive versus like right now people who run businesses and have been in business for over a decade or whatever, they're used to like having processes, and the concept of a process in AI may be an antiquated concept because when I like what I do when I build agents is I'm like, here's the end goal. Here's a policy and here's an end goal that I want to reach. And I just upload a ton of documents. And I'm like, all right, give me the result. I don't need it to like, it could run its own process in the background. I don't really care. I just want the result.
Right. That's interesting because that's like kind of how you would, if you were to hire an employee as a senior manager, you would just say like, look, this is what I need to get done. Like, go figure it out. Correct. And then let me know next Wednesday what we're doing. You know what I mean? And then, which is
a lot like, I don't know if you guys have, like, if we talked about Clay, have you guys heard about this company? Like,
no, tell me.
They're like an AI CRM sort of sales product. And that's like what they do is they're just trying to be like, hey, if we just take all your data, we're just going to build the entire thing for you. Like our AI can generate a spreadsheet for you. It can generate a contract for you. It can do DocuSign for you. Like you don't need to have these third-party tools. And it's not about talking to the other tools. It's really like, that's the concept of talking to a tool. Like I am a tool. I can do whatever I want. I can turn into a hammer. I don't need to go find a hammer.
Like, fair point.
So I think about it like that when like that's like where I think the puck is really going. And then you look at like a Glean and you're like, okay, well, this is just really improving, and it's the next generation improvement to an antiquated process. And I wonder like, well, maybe we should just have a much better process.
Yeah. Do you think like, so this is like, to me, this is like how sausage gets made, right? So like, to be fair, small companies, I can definitely see doing what you're saying, right, Evan? Because it's like blank sheet of paper. I can do whatever I want. Right. So that's easy. Or companies that are growing really quickly could be like, I need to hire 10 new salespeople, or I could just like let this AI agent let it rip. You know what I mean? And it can go and just cover this new territory. Like, let's see how it does. You know what I mean? Or, you know, like but I can also see bigger businesses having to just go like step by step. Like, you know, I can't go from like A to Z. I need to like take some intermediate steps, or else I'm just not going to get comfortable with it. You know?
Well, you're right. And like, honestly, the concept of structures and steps is all designed in the effort to scale. Right. You're like, you build processes as you're trying to scale. You want to hire more people. They need to, you train them with processes, you train them with handbooks.
Yeah.
With AI, you kind of don't need the concept of these processes to be so in depth. You just kind of have to give
it could scale.
And also because it can do unlimited things over unlimited time.
That's right.
But it could get really messy with a bigger company. Because if you don't do that interim step that Aaron is suggesting, you're going to be like, why am I doing this? Because the AI said so. And then people are going to get fed up and come with pitchforks and things like that, as opposed to you do that interim step and then you swap it out later. I know that seems like a lot of work, but if you don't trust in the process, I just feel like it could backfire if you go too fast.
This is the stuff right here. This point of discussion is what makes a market, right? And because I think there's going to be solutions for both. Okay. Right. and I think there'll be customers for both type of concepts. And then it will be interesting to see if like one persists and wins, or if they can both coexist, right? I mean, I could see people totally buying in and wanting to go right to the step that Evan's talking about, and I can see other people who won't want to do that. But then there's this element of like creative destruction. So maybe those that don't want to fully embrace, they don't perform as well. So then their margins are not as good, and you know what I mean. So there's
and I
there's
think
some interesting dynamics here.
The ultimate would be Glean could pick up that revenue today, and maybe Glean is building the ship while they're sailing off to the puck.
This is my point.
That's where that would be perfect. You know, they're evolving with you.
Yes.
I used Salesforce like a decade ago, and it was nowhere as advanced as it is today, right? So hopefully that's the case for Glean. Now I'm just convincing myself that's a buy. Love every company.
I mean, that's kind of where I'm at with it. It's like, you know, you're like meeting customers with where they're at. You know, like I think most companies, if you go to them and be like, are you using AI agents right now? They'd say, no, we're not, right? A significant majority of them. So
of course,
if you're able to get in there and start to like chip away and help move them into that and deliver solutions to kind of get them there, that right now, I think that, and maybe probably for the next like 24 to 36 months, that's probably like where the world's at. And then, you know, to your point, Nick, like and Evan too, like they'll be ready for that kind of like, all right, we're going to go into a new market now. We're going to go into South America. Let's just go all AI. We'll go AI first in South America, right? And let's only hire 5 people instead of hiring 100 like we were going to do. You know,
sounds like a political mantra: AI first. We're an AI.
I've been hearing people say that we're an AI first company. Remember, when people used to say mobile first, we're a mobile first company. We're an internet first company.
It's true.
Right?
I forgot about that. Yeah.
This is happening. It's AI first. That's going to be the new. We're an AI first company. It's coming. Believe it. Believe me. It's coming. So, yeah. All right, fellas. This is a good one. Let's end it there.
Great stuff.
I appreciate your time, boys. All right. I'll talk to you.
Bye.
Cheers.
Thank you.
Cheers.